Great, welcome everybody. My name is Jim Cunha. I'm a Senior Vice President of the Boston Fed. First of all, thanks to CEBRA and the sponsors of this conference. It's a real pleasure to be here, and I'm really excited to both chair and also be a participant on this particular panel on central bank digital currencies. What we're going to be doing is first do introductions of each of the speakers, and then I'll run through a bit of the show. Then each of us will do our own sessions, and we would hope to get some great Q&A from the group. So, as I said, my name is Jim Cunha, Federal Reserve Bank of Boston. I'm currently responsible for working with the industry on reducing fraud in the US, but also in technical experimentation with central bank digital currency. So, Henry, let me turn to you to introduce yourself.
My name is Henry Ohlsson. I'm a Deputy Governor of the Swedish Central Bank, the Riksbank.
Hello everyone, I'm Bénédicte Nolens. I'm the head of the Hong Kong Center of the BIS Innovation Hub. As you know, we are set up to help drive innovation in the central banking community. So I got on my backdrop our mission, which is to take this world apart and put it back together even better.
Great, thanks, Bénédicte. So what we're going to do is, first I'll do a quick presentation. I'll be covering just a general update on what CBDC is or are, a little bit about sort of the global context, and then talk about the work we're doing in the US. Henry will then talk about the Rigsbank work, and as Bénédicte says, she'll be talking about the Innovation Hub work. So let me just get my screen up here. So let me just confirm, Ken.
Yeah, we can see it, Jim.
Okay. Okay, and I apologize. Whenever I start sharing, I lose my own picture. So as I mentioned, I'll be talking about central bank digital currency from the US perspective. So first, quickly on CBDC, central bank digital currency. Just to level set us all, this would be a digital currency, a fiat currency that exists only in digital form, basically issued by the central bank. I say could be legal tender because lawyers haven't quite determined whether that's true or not, but this is a liability of the central bank versus most electronic money we know of, which is a liability of the commercial bank with which you do your banking. I get the question a lot, how do you keep it stable? And by definition, it's worth $1, at least in the US context. So there's no need to keep it stable because it is valued at the same way a dollar bill will be valued. And two mode exists, wholesale for interbank use, sometimes called RTGS, or real-time gross settlement, and then general purpose or retail. This could be for person-to-person, point of sale, or even e-commerce, given the fact it's in digital form. Now, I'm not going to go over all of these, but a few key messages here. This is just what's talking about some of the major projects going on around the world here, these two slides here. But the main message here is there's an awful lot going on. And these are really just in the retail space of CBDCs. There's more actually in wholesale as well going on. The major message here is, CBDCs aren't all created equal. There's not simply one technology that can solve this problem. Countries have different legal contexts. Countries have different norms. They have different views on, say, privacy, different issues relative to offline processing. So the real message here is they're not all the same. It's not a homogeneous thing. You can't talk about CBDC as if it's one thing that's common across the world. We started our journey in the Central Bank in Boston with the wholesale CBDC in line with some of the other leaders, Singapore, Canada, Japan, the ECB. And we were testing distributed ledger technology. Our goal really then wasn't to think about CBDC, but really more to understand the technology. We wrote a paper in 2018 detailing that research. But then in 2020, we pivoted to retail CBDC and launched Project Hamilton, which I'll talk about now. But also been working with the other central banks through the BIS and sometimes bilaterally to share technical experiments, to share use cases, et cetera. So this really has been, a collaboration on a global scale. So Project Hamilton is technical research. This is a multi-year effort we have with the MIT Digital Currency Initiative, or DCI. We chose to work with them because they've been studying both cryptocurrencies and CBDCs for 5 years. We just think that they were one of the most advanced about thinking about what's possible technically. We're creating a research model, a platform for analyzing certain components, which I'll talk about in the next slide. And there's different choices. We're not just designing one system, we're designing multiple to understand the trade-offs that we can think about when looking at a CBDC. We're technology agnostic. We're not starting with a distributed ledger or a traditional database structure. We're really looking across multiple technologies to understand the vast possibilities. And our goal is to jointly publish both a white paper on our technical research, but also open source license for the code sometime this quarter. We think it's really important that we share this code with others so that they learn from our experience. And as you've probably seen, most central banks are publishing very detailed results so that we're all learning. And we really encourage people, once we open up this source code, to contribute, to give us your ideas, give us your code, and we'll be maintaining this code jointly with MIT as long as there's interest in trying to make it better. Now, the specifics of Project Hamilton, phase 1, which we're close to finishing, really is to build a core engine, to mint the money, store it, and then move it between participants. And anybody can do that on a small scale where you put some data into a system, call it money, and move it around. That's the easy part. But doing it at scale, doing it the type of throughput we think we need in the US, we're talking about tens of thousands of transactions per second, under 5-second settlement, and resiliency. You can't have the system go down because money has to always be available. So we're building in certain resiliency and certain parts of the privacy structure. So this really gets us to the core of, can we at least process at speed and with the type of resiliencies we need? And as I said before, we'll publish the results of this work, phase 1. Then move to phase 2. The process there is then to code and test different policy choices. I'll be very clear, the Federal Reserve has not established policies relative to CBDC. And many of you probably heard Chair Powell say that there'll be a consultation done by the Board of Governors sometime this summer. We'll be getting input from the public to think about, what are the major pros and cons and issues for CBDC. We'll be testing some of the key areas where there are challenges. So for instance, privacy, and where there's also conflicts, privacy versus traceability. How can you maximize privacy and still catch the bad guys relative to anti-money laundering, et cetera? And we think that this phase 2 will do 2 things. Can we add more complexity to the system and still go fast, still go at the same scale we were before? And can we possibly solve some inherent conflicts? Like I said, privacy and traceability are at odds with each other because one needs more data, one assumes you have less. So maybe technically we can do some work to help maximize those 2 things. And once again, we'll be publishing the results of this work as well. I should say the goal here is strictly technical research. We have no charge at this point to go to pilot or definitely not to go to production. It's really just trying to understand what's possible. Then separately, the Fed of Boston is doing a research effort to understand what else is available. We'll do a comparative analysis of about 40 platforms. These could be open source platforms, distributed ledger, but also private sector actors that say they built something that can meet the needs of the US. So we'll do these comparative analysis, and then we'll bring in some of the leading platforms into our labs to test against the same software that we wrote and tested as well. And this will take over a course of a year or 2 to complete all of this. The real goal here is to make sure we're fully informed about what's possible, make sure we're fully informed about what the technology can do in case we do decide at a later date to move forward. And as I said, the first phase with MIT will be shared. We are not planning on necessarily sharing the output of this. It's really for our own internal understanding of what's possible. And we'll also be watching all the efforts of the other central banks just to make sure we have a full understanding of the possibilities here. So that's my piece. Let me turn it to Henry to walk through what's happening at the Riksbank.
I would like to start by thanking the organization for inviting me and the Riksbank to present what we have been doing concerning CBDCs. We started to think about these things back in 2017, and at that time we were pretty lonely. Sometimes we felt very lonely because the things we were doing were questioned by others. But now both central banks seem to be one way or the other involved in these matters, and I think that is really good. The field is not crowded yet. What I will do today is to present our technical tests, the results from the first part, and our thoughts regarding the second part of our technical tests. But I will start by saying a few words on the policy background, why we started to do this in 2017. The main driver for us back then was the marginalization of cash. Every year we surveyed the Swedish population and asked different things about how they pay and the means they use when paying. Back in 2010, 40% said that the last purchase was they used cash, the last purchase. 10 years later in 2020, only 10% answered I used cash. So cash is marginalized in Sweden and in a very rapid pace. As I said, we started thinking about this in 2017. A few years ago, we had started a pilot study, and our partner was Accenture, and we have focused on the technical aspects here. I would also like to add that no decisions have been taken yet, but we hope to be able pretty soon, really, to say if we will go all the way and introduce the e-krona. One general thought behind this is that bills, cash, gave the general public access to central bank money. And with cash going away, the one fundamental question is it possible to give the public access to central bank money in using some other technology than simply paper money and coins? Our aim is to find a way of easily accessible, simple and user-friendly ways of getting electronic kronas. And I would like to add that one important aspect is that all groups in society should be able to use the electronic kronas. We also believe that if we succeed in this, we will strengthen the resilience of the payment system. The e-krona system will become a separate payment system, so it will become an alternative to what is offered by banks and card companies and so on. So, the e-krona pilot, as I said, tests a technical solution to increase the Riksbank's knowledge. Some basic principles we set out for the pilot study was that the e-krona should be guaranteed by the state and not being a claim on a private sector actor. It should be safe. It should be fast to pay with the e-krona, instant settlement, and it should always be available. If you look to the right, you have a snapshot of what the pilot study produced. And there you see a mobile phone and that the wallet in that mobile phone carries 2,459 e-kroner. So this is how it looks when you use what's been produced in the pilot study. Now, there's a lot of information in this slide, but the basic idea here is that to the left, you have the Rigsbank. The Rigsbank issues electronic kroner. There are some participant nodes. Participants could be banks or other financial sector actors. These participants, they should be able to simply get e-kroner from the Riksbank, very much in the way the old technology when the participants came to the point of pickup at the Riksbank and collected bills. And the participants then would interact with the end users. So basically, if you want an e-krona, you should go to a participant and ask the participant to give you e-kroner. It's like an automatic teller machine. This is the basic idea. In the pilot, it turned out what has been used is a DLT network and blockchains. So it's a kind of distribution model. It's built on tokens. Also note that there is a notary node in the picture, and this node will simply see to that all the transactions are okay within this system. We have set up the pilot. We have tested this. All the different actors here, they have been simulated. So it has been a closed system, but the people working on the pilot, they have been sending money to each other using this system. And so far it has worked out well. The second phase of the pilot, and I go here, will involve some real potential participants. We asked different actors in the Swedish financial sector, and we have agreements with one of the big Swedish banks and one really big IT company. And the second phase of the pilot will simply be to introduce these actors into the system that was built during the first phase. So this work has been started now. One thing that we are really interested in is to test offline solutions. Offline in this world might not be as offline as cash, but we are trying to see if we can find technical solutions to provide offline solutions to this payment system. I think what we see now is that many of the IT systems are threatened, and things are happening all across the payment system right now. For instance, one of the big Swedish department store chains, they have had to close their stores for a couple of days because hackers went into their payment system. So obviously there are threats around here. And the offline solutions can be one way of still keeping the payment system going, even if there are problems. We will, in the second phase, also try to integrate with the point of sales terminal system. This is one way of trying to mimic a real-time real-time technical solutions for an e-krona. And we will also continue to test and see if different ways of performance of the system. Jim talked in his introduction about mass payments, and this is an important aspect also here. And I mean, we have not been able to test mass payments within these pilots. So this is a thing that will remain for the future, really, to work out how this can be done in a safe way. In fact, this is my last slide, so I stop here. Thank you for listening to me.
Thanks, Henry. And can you just talk about why you picked Quarter, why you want the token type system?
Well, when we decided to get partners for the pilot study, we didn't specify really that it should be tokens. So we asked for companies to come up with their ideas to how to solve this technically. So why we ended up with tokens was partly because we ended up working with Accenture, and this was we found it the most interesting solution at the time. So this is a simple answer to your question.
All right, thanks. And as I said before, everybody will see that there are different solutions being tested, and I think it's very positive that we have different ways of approaching a similar problem. Let me now turn it to Bénédicte to talk about the Innovation Hub work.
Okay, I'll try the screen share. Are you seeing it? Okay. So, okay. So first slide is just the introduction. So I'll be talking about the BIS Innovation Hub's approach to CBDC. So I'm sure you all have read the annual economic report, including the chapter on payments, including CBDC. So this obviously links into what we're doing in the BIS Innovation Hub. So for context, in terms of the names of the people, the names and the faces, right now, this is the core team, but very soon we will be adding, as you know, a representative in New York, and we will also be opening centers in Stockholm, in the Bank of England, in the Eurosystem, and yeah, that's it, these four. And in Canada, sorry, Canada, I knew I was missing one, Toronto. So in a few months from now, this will be a lot more people. So the first thing we had to do as a BIS Innovation Hub is obviously define what our mission is. And so we decided that we would focus on 6 strategic areas, and they're listed here. So it's SupTech and VecTech, next generation FMIs, central bank digital currency, open finance, green finance, and cybersecurity. And so today I will only focus on central bank digital currency. So you've also seen, I'm sure, the reports by the CPMI in terms of payments and the need for improvement in different aspects of payments. And I would want to emphasize different aspects of payments, because payments is not a very simple thing, so to say, to resolve. So if you look at these different aspects that the CPMI is focused on, then you can see that CBDC actually fits under number 19. And it says factor an international dimension into the CBDC designs. So for this presentation, I will consequently be focusing on the international dimension. And to do that, I will focus on wholesale CBDC. So cross-border payments are actually very, very complex. It seems simple, but it is complex because it involves clearly an FX conversion at some point. It involves liquidity management in foreign currencies that can be very costly. and it involves ensuring a high degree of technical interoperability across payment systems, which is actually quite hard to achieve. And as you know, at the present time, we have both the banking system as well as increasingly the payment providers in the middle of that process. Another very big complexity is around AML. And also I will touch a little bit later on governance, conflict of law, etc. But for this slide, I want to point out that the AML regulations are actually quite consistent in their vision and their purpose globally, and are very important also for financial stability. But they're very difficult to actually put into a technological format. And if you look at what the banking system is doing, there actually is a whole ton of manual work involved. And it's actually quite hard to eliminate all of this manual work. So for the purpose of the wholesale CBDC project that I will be talking about, which is Internon Lion Rock as it evolved into the CBDC Bridge, I want to start with the problem statement. The problem statement is that cross-border transfers are costly and time-consuming. So according to the World Bank, the transaction processing fee for a cross-border funds transfer can average up to 7%. Also, it can take several days. But very, very importantly, the number of correspondent banks are retreating. In here, you can see the research that was issued by the BIS. I would note that there's also research before that by the WEF as well as by the IMF. And all of them are showing that there is a decrease in the correspondent banking connections. Now, this is normally associated by something that is called de-risking. And de-risking in the world of compliance means I find it too risky, so let's not do it because we're going to risk too big fines and it's not worth our core operation. So what that means is that increasingly across the world, countries are actually financially excluded. And I'm not talking individual financial exclusion. I'm talking here country financial exclusion. For those countries, it's actually very hard to get transfers to work properly. And the number of intermediaries in the process, of course, then can take higher fees. And I would note up front that I'm not talking about countries that are within the sanction system, sanctioned countries. I'm talking about countries that are not sanctioned and that are no longer served by correspondent banks, are less well served by correspondent banks than they were in the past as a result of this de-risking exercise. So Internon Lion Rock, the project that the HKMA launched with the BOT, I think it's around 2 years ago, was actually focused on this problem. And the problem is you have these correspondent banks there in the middle. Assume they're there, you have actually delays, you have complexities, you have cost. And if I had the assumption that they're not there, you have a bigger problem than that. So with CBDC, and as published in the Internon Lion Rock report, because this is taken from the published report that was issued early last year, the idea is that you build a corridor network that allows two countries to issue CBDC on a joint platform and thereby enable the reduction of the number of hops in the system. And as you would know, whenever you reduce complexity in a process flow, you should actually be reducing cost in the process. So that's the idea of Internon Lion Rock. Now, like any prototype, it's very important to understand that they are not at scale. So you can see it has 2 validator nodes, 2 standard nodes, each for the commercial banks. There's only a limited number of jurisdictions. So to keep a prototype feasible, it tends to be unscaled. And I think that's what Henry and Jim were also saying, is like you're far away from scaling, even if you have a prototype. So on this prototype, the central banks operate as a gateway to the bridge, controlling the supply of CBDC tokens, as well as validating and monitoring the transactions. Commercial banks are able to directly access this bridge to transfer funds to each other and conduct FX conversions via CBDC tokens. It is possible to connect stock exchanges, and they may be granted direct access to a bridge if they provide the service or if there is an identified use case. And corporates are able to access the bridge, but only through participating central banks. So to be very clear here, this is not a disintermediation process. This is just a process of reducing the number of hubs in the system. So the phase 1 objectives were to explore the capabilities of DLT by developing a POC for a cross-border network, as said. It was to look at how much you can improve the efficiency, liquidity management, and also how you can achieve compliance with local regulations. One thing that we are very familiar with in Asia is capital controls. It doesn't exist in some parts of the West, but it's very prevalent in the East. In fact, most markets have some form of capital control, and this kind of a corridor network can ensure compliance with capital control regulations of these various markets. Importantly, under number 4, it also was to foster, importantly, a collaborative environment across central banks and financial institutions to learn how to use a blockchain for this purpose. In the second phase of this project, which we are now still in and will be progressing on / closing and then moving to the next phase of the project, the focus was on adding more jurisdictions, like thinking around if we needed to add more jurisdictions, how scalable would this network be? In addition to that, it involves research studies around, for example, governance. And for that purpose, we have established a series of subcommittees. So in the middle of this phase 2, in fact, this project a little bit morphed in that 2 more central banks joined, which are the UAE and the PBC. And as a result of that, this project got renamed for the time being, and I'm not saying that's the final word, but it's called CBDC Bridge. And thereby, it very nicely matches the paper from Raphael Auer, which I here also inserted, that discusses the multiple CBDC platforms. I hereby also copy from our website, and therefore this is public information, how this current part of the project, what it is looking at, and you can see as said, more jurisdictions and scalability. We've established now a formal steering committee, which is chaired by myself at the BIS, and we have 4 subcommittees. One subcommittee will be focused on governance, the second one on policy questions, the third one on the technology and whether it is sufficiently scalable as at current. And fourthly, we have a committee that will need to work further on the use cases. And in this regard, I want to say it takes 2 to tango. So I showed you the problem statements. So technically there is a use case, but we need cooperation from the banking system. So the banking system needs to be convinced that this can help them, and this is not a system that operates in isolation. Banks, as I mentioned, are participants in the system. So we're still in the process of defining more detailed use cases, as in transactions that we could pilot. So I want to show you hereby also another extract from our website, is that this is not the sole CBDC project. We do have the Helvetia project, for which already a report was issued. We also have a project in Singapore that is studying multi-CBDC. And furthermore, we have in Hong Kong a retail CBDC project that we've called Aurum. And as you can see, it's nicely golden. Aurum is the Latin word for gold, by the way. And that will study a 2-tier distribution model of retail CBDC as well as hybrid CBDC. As mentioned, there is a lot more in our annual report, so take a look. And finally, that's our team. And as you can tell, it's very small, and therefore it relies on a lot of collaboration. And the more collaboration we get from global central banks, as well as from the industry, the more easy it actually becomes to realize some of these prototypes and to think about the further future.
Thank you, Bénédicte. That was wonderful. And I want to reiterate a point you started with and illustrated towards the end. These are very complex systems we're talking about. And actually, they're systems of systems, systems of interconnected systems. And so this is much more than just a technology solution to solve the problem. And that's true of most things we're trying to tackle. be it financial inclusion or cross-border work. So I think your slides towards the end of the MCBDC really illustrate how complicated it is when you get into legal and governance and risk, et cetera. There was a question in the chat. I'm not sure if you have the answer to this or not, but in that MCBDC model, how is FX handled? How do you think about foreign exchange across currencies in this type of a model? Have you gone that far with at least the thinking?
Yeah, so the FX will be handled by the banks as opposed to by the central banks, and that's why I said we do need actual collaboration from the banking system. Inversely, I would say though that we do think that these systems, and I think Agustin said that recently, actually yesterday on a public panel as well, we do think that only progress can be made as long as we work together on this. So it's not only that we need it, it's that we think it is a better outcome if we all collaborate. So the FX part would be handled by the banks.
Great, thank you. And I should have mentioned to folks, I said chat, but there's a Q&A at the bottom of your screen to put questions in. And I should have stated up front that what I've been saying and will say are my thoughts, not necessarily those of the Federal Reserve System. And I assume that Henry and Benedict make the same statements for themselves, but if not, they can correct me there as well. But there's a question for me on if we're evaluating 40 different platforms, how are we ensuring that we know enough about each of them to get to the real data about these different solutions? And in the private sector, what we'll be doing a request for information from private actors. So they'll be handling the exact same questions across all platforms. We developed a framework, so at least we're asking the same things of all the platforms. In the open source, say distributed ledger platforms, it's a little more rudimentary. Most of these platforms have published processing speeds and certain ways of handling distribution, et cetera. So we'll be looking at those. So for instance, if a distributed ledger platform can only process, say, 5,000 to 7,000 transactions per second, at this point, it can't meet our needs. It would never be able to scale to US heights as far as throughput. So we wouldn't have that high on our list. So we'd probably take the ones with the most throughput at this point in time. And as everybody knows, this is a changing field. Constantly new products are coming out or products are being improved. So this is not a one-time analysis and then it goes away. So hopefully that answers the question. And we'll be working directly with the companies in dialogues, et cetera, once we get some formulation there. And so there's another question. I'll just open it up for either Benedict or Henry. There's a question about, have we thought about going the El Salvador route and using a cryptocurrency as our legal tender versus building our own CBDC? And I'll change the question slightly by saying, or stable coins. If we think about cryptocurrencies or stable coins, are those even in consideration, or do you have any particular reaction to that question? I find it's an interesting question. Benedict or Henry, any thoughts?
Yeah, look, I wouldn't be speaking there for the BIS or just my own view, but that obviously doesn't give you control over your monetary policy, right? So first off, that's not the best solution if you want to control your monetary policy. But secondly, as well, as we know, some of the currently existing cryptocurrencies do not really allow for AML compliance and sanctions compliance. So there is actually a fundamental part of the process that is actually missing, and that this is contradicting. So I think that some markets may decide to do that, but I think they may be doing that for very specific reasons. And I wouldn't think that this will become a mainstream central bank trend.
My answer is that the things we are doing, the ultimate purpose is to have a Swedish krona, and the Swedish krona surviving the technical changes. we need a Swedish krona in order to have a Swedish monetary policy. So stable coins and cryptocurrencies have not been on the agenda anytime in our discussions.
Great, and I know that sometimes this is called synthetic CBDCs in some literature, and most central banks don't consider a synthetic CBDC as a real CBDC. Not saying that there aren't potential use cases or potential things that can evolve, but I think most central banks are in the same camp on that particular front. Another question for me, which is, I mentioned that we pivoted from wholesale to retail, and does that mean we solved wholesale? By no means. We were a volunteer army, so we basically were, the other central banks were able to apply more attention, specifically Canada with Jasper, Project Ubin, and the others. And we weren't contributing at that point as much as they were. So we were working with them, but not doing our own work. And the reason we actually pivoted to the retail space was just because of the number of developments with Project Libra, now Diem, People Bank of China, and many others. But more specifically, there actually were, because of COVID, there were some bills that were introduced in the US in early 2020. They did not make it through Congress, but they would have directed the Fed to build a retail CBDC, basically. And so we thought the most important research we could do if there was potential legislation coming was to focus on retail CBDC. And there was some great work happening around the world on wholesale. We just thought our efforts were better spent, on that particular area. Henry, can you talk a little bit about the learnings from the first pilot? You mentioned a little bit about the first pilot. Can you talk a little bit about just some of the things you learned, especially as you thought about moving to the second phase?
I'm happy to do that. I mean, one conclusion from this is that you can construct a CBDC in many different ways. A simple example is, suppose that you have your e-kronas in a mobile phone. What happens if you lose your mobile phone? If it's very much like bills, then if you lose the phone, you will lose the money. The other extreme is to have something very close to an account system. And if you lose your mobile phone, then the money will still be there. And these are two extremes, and one need to think about, where in this spectrum would you like to have your CBDC? Or might it be the case that you would like to have the two types of the CBDCs? For instance, you can think of the people living in the country would like to have more account-like e-kronas, whereas if people visit the country, then the first alternative with a non-account system would be more efficient. So this is one of the issues you can think of. For us, the choice here might have some legal implications also. The more the e-krona is similar to a krona bill, the easier it is legally to introduce it. The more you distance yourself from something like a bill, then the more legal issues arise. I would also like to say that we found the DLT technology most interesting when starting out the pilot. But, I come from academia. I've been in academia all my life before coming to the Riksbank. And this is a situation where you really need to try things. Our choice of DLT technology for the pilot does not mean that we will choose DLT technology if we introduce an e-krona. I mean, there's always the possibility that you make a choice and then you fail, and then you have learned something out of that too. So we have been pretty open-minded. It might be that if we decide to have an e-krona, that we will choose some other technology. But so far, it has worked out well.
Great, thank you, Henry. And Bénédicte, we've talked a lot about retail today. You mentioned MCBDC as a wholesale space. Is the Innovation Hub or others you're working with also doing work in the retail space of CBDC?
Yeah. So we expect that with having more centers opening in the next year, that there will be more focus on retail CBDC. As it happens to be, if you take a look at the map that the BIS has issued of who's doing retail CBDC globally versus wholesale CBDC, is actually quite interesting, because the smaller countries/hubs like Singapore, Hong Kong, UAE, these are focused on wholesale because they are trade hubs. So wholesale is what they focus on. Whereas bigger states, right, they tend to be focused on retail CBDC because they have a much bigger playground actually for that retail CBDC. So that said, within the BIS-IH, incidentally, within my center, which is the Hong Kong Center, we do have one retail CBDC project, and it is actually comparing hybrid CBDC, which is intermediated retail CBDC, and comparing that to the indirect or synthetic CBDC. So it is going to compare these two and look at the process differences. Now, maybe to express to you why that happens in Hong Kong. Hong Kong is actually one of the rare places on earth where the banks issue the notes. So the note that we carry in Hong Kong is actually a liability on either the Bank of China, HSBC, or Standard Chartered Bank. So we have so-called note issuing banks, which is a little bit unique. But we thought, given that unique situation, it offers a good opportunity to compare these two models.
Great, thanks. And actually reminds me of the US history, where in the late 19th century, we had a very similar situation where commercial banks, sometimes even municipalities, towns, cities, issued their own paper currency. And what we found, and part of the reason for the Federal Reserve even coming to in existence in 1914, was that we had currency that was not trading at par. You know, so just think, if you had a $20 bill that was drawn off a Chicago bank and you're in Boston, if you don't have the trust that that bill is legitimate, you would maybe give $18 or $19 worth of value for that $20 bill. And the same is happening in the world of checking. If a check came from out of state, you may not give full value for it, which is, you know, non-par or subpar. So that was part of the reason why the central bank was created in the first place, was to create that national currency and also to create a clearing mechanism for checks, believe it or not, in the US, in addition to obviously monetary policy. But it just shows you, some of the risks that can arise if you don't have a central bank controlled currency, to Henry's point, and it's all private sector, especially if there's hundreds of those private sector actors, and that does get into some of the learnings we've had from our own history. Henry, another one for you, then I'll get back into the Q&A in the box here is, will your e-Corona be able to be used anonymously like a paper Corona? Is that in your designs at this point or testing?
I would say both no and yes. Obviously, if we have an e-Krona, we will have some traces of the transactions, and this will differ from regular bills. So in that sense, I guess we will legally, if there are some crimes, people investigating crimes, then probably we will need to give the information we have. But what I experience when I pay with my cards is that this information is used commercially, because I tend to get lots and lots of ads, related to my purchase, and that we can certainly say that we will never sell or give this information to anyone else for commercial purposes. So there is a difference there, and when I've traveled around Sweden before the pandemic, meeting people and discussing things, I've met a lot of enthusiasm regarding the e-krona. And one of the reasons for some people is the issue of privacy, not compared to cash, because people have stopped using cash, but compared to using debit and credit cards.
Great, thanks. There's one question. Like I said, we haven't done our policy research, and I'm a technologist, so I can't answer this. But are we worried about our own currencies being circulating outside our own borders? Is there any concerns about? And I guess this is in the retail or wholesale space. So Henny, I'm not sure, or Bénédicte, if you have a thought about any challenges relative towards a fiat currency circulating outside the country boundaries. This particularly talks about digital dollarization, but I'm not sure any comments you have on that, because it is a complex topic.
Yeah, I think it is actually a topic that is starting to gain a little bit in interest across the central banks. So the two currently existing cases of CBDC, because there are two live ones, that is the Bahamas, and secondly is the ECNY in China. These two actually are currently completely national, so you cannot leave the border with these, right? And the question will indeed be one about cross-border nature of these type of currencies, so to say. So I do think is a very important question, because you could say, well, it's the same with cash. I could be carrying cash, but again, being very familiar with Asia, because I've been here now 23 years, most countries, I can only carry in a limited amount of US dollars or euros, as the case may be. And then secondly, inversely, I can only take out a limited number of, for example, Korean won or Thai baht, for example. So it's not so easy in some to, as a human, walk around with a big pack of currency and then, in fact, declare it wrongly on the form and thereby commit a crime, right? You become a criminal when you do that. In the case of digital currency, though, it can move a lot faster, and frankly, it can move at the click of a button, which is the real idea of these digital currencies. So I do think these questions are going to gain more attention in the future. I don't think people have thought through it to an extent that they have a solution or a standard. And the reason is simple, because there aren't live examples that show that this is an immediate topic that requires immediate attention.
So my answer to this question is that, before we started to discuss CBDCs, the Swedish krona never became a world currency. So we're a small country, and our currency is small, and I'm not that worried about that. The Swedish e-krona will become a world currency in the future. I think that this is an issue for bigger countries with currencies used all over. But I have two other comments on this. One thing is that Sweden is a member of the European Union, and the idea of single markets, for labor and capital and so on. This will, of course, affect if we introduce an e-krona, because basically all European citizens will have to be treated in the same way with respect to the e-krona. So that is an important aspect. And then you can say that, one thing that you can discuss is the denomination of CBDCs. If you look at regular bills, you have bills of the highest value, and there's also a discussion, is this denomination too high? Is it too easy to move bills because the denomination is so high? And I think that you can partly transfer that discussion also to CBDCs, and you can, think of different ways of introducing denominations, and that way you will introduce some frictions in the ease of transferring CBDCs across countries. So I think that this will be an issue, but honestly, I don't think that it will be a major problem for CBDCs. I think that it can be solved, and dollarization and eurozation, that's more a problem for the Fed and the ECB than for us at the Riksbank.
Yeah, I think the point too is, first you need to understand what are the risks and what policies you're setting. And then I think you both alluded to where can technology potentially help in either restricting flows or monitoring flows, et cetera. Like I said, this friction with paper currency is pretty strong, but still 60% of hundreds, I believe, are overseas as either store value or other purposes. Which gets into another question here. We're down to 4 minutes. One of the potential issues of a central bank digital currency is disintermediation of banks. Maybe not fully, but at least the runoff of deposits, which obviously affects their ability to lend and creates other capital issues with the outflow of deposits. And I think I recognize that as a real risk and thing to think about, problem to understand, and then to create policies to the extent that that's a risk you want to deal with, create policies and technologies that help to mitigate that risk. But it's definitely something that needs to be thought about. And Henry or Bénédicte, anything relative to intermediaries being disintermediary? I know, Bénédicte, you mentioned that as part of the structure of your MCBDC process.
Yeah, so for both our projects, the CBDC Bridge, as well as for the retail project, Aurum, they're both of them are intermediated. So we're trying to, let's say, improve the intermediated system, but we are not seeking to annul the intermediated system. I think in the models described by Raphael's Hours research, right? There's one model called the direct CBDC model, but it would require central banks to have retail as their customers. I will defer to Henry here to comment, but I haven't really seen many advocate for that. Many central banks advocate for that model. But inversely, what I see is an enormous amount of anxiety amongst the banks that will be the model. So maybe again, Henry has longer standing experience on this. Maybe he can comment.
We live right now in a world where we have seen rapid technological change, and it affects the financial sector. Many of the business models of private actors within this financial system simply are challenged right now. And they are not challenged by central banks discussing CBDCs. It's changed by the whole technological change. And we have had a discussion of the risk of bank runs if we introduce a CBDC, an e-krona. But the risk is already here, because if any of the banks, if people lose confidence in one of the banks, they can very simply move their money to another bank. So I think that I'm not that worried about defunding of financial institutions. The thing is that the world has created a situation with more competition, and they have to get better in order to keep their money. This is simply the case. This is my view. The big threat to them is to keep on their old ways and not realizing that technical change will force them to have new business models. And this change is much bigger than if some central banks introduce e-kronas or e-euros or e-dollars.
All right, Henry, I give you the last word there. And obviously it was quite a statement to end with. So we're at time. I want to thank the audience for some great questions. Henry, Bénédicte, that was a really nice session. I do a lot of these, and I think There's a lot of information out there. Obviously, a big topic, lots changing, a lot of evolution. And I'll just end by saying, I think when CBDCs are set up, I think the innovation will happen on top of them in ways that will just continue to make our systems better. So with that, let me just say thanks again and close out our session, or I'll let the moderators close out our session. Thank you all.
Thank you. Bye.